up posing these questions to Sacchitanand Uttekar of Tradebulls, who's joining us now. Sacchitanand, good afternoon. Thank you so much for joining in. The same question as yesterday, how important is that 23,800 level on the Nifty? And if we break below that, does the fall towards that 200 DMA get accelerated?
Well, good afternoon, Amos. Good afternoon, Mangalam. I think clearly the market is in a very strong bear grip. Exactly a month ago, we saw a very decisive breakdown below that 25,500 mark, and since then the Nifty has been trending confidently below its 5 and 20-day exponential moving averages. Now, if you look at the placement of the 5-day exponential moving average, it is currently placed at 24,100. So until unless we don't see a swing above the same, there may not be any change in stance as far as Nifty is concerned. Even if you look at the 60 minutes data, clearly we are seeing bearish flag formations indicating a further drag. So I think from a turnaround perspective, the Nifty needs a very confident closing above that 24,100 mark to really reverse the trend. But currently, the way data is shaping up, we have seen a good amount of writing at 24,000. And if you look at the intermediate support, which is placed at 23,700, I think that particular support may also be violated. So probably we may see a swing, going forward, or a final drop towards 23,560 kind of a zone, where its 200-day exponential moving average is placed. So I think it's better to be on the short side when it comes to indices. The stop loss for Nifty currently is placed somewhere close to around 24,070 on a closing basis, and we may see this particular decline getting extended towards 23,700 immediately, followed by 23,560. If you look at Nifty bank data, a very similar trend. It has been consolidating for the last 2 weeks, but the important juncture on the higher side is placed at 51,645. So until unless we don't see a closing above the same, we may not see a very decisive change in trend. On the contrary, the way its daily ADX has started, trending towards that 25 mark. In case if we see a breakout there, then probably we may see a further drag, led by Nifty Bank itself. And the next probable support for the index is placed somewhere close to around 50,400, 50,350. So I think clearly the sell-on rise mode may continue for both the indices.
All right, sell-on rise may continue, and that's exactly what is happening. When we just started the segment, Sachi, the Nifty Bank had shown signs of recovery. From 0.5%, it had, cut its losses to just about 0.25%. But now as we speak, the Nifty Bank is down about 0.5% once again. The broader markets as well. Now there are more stocks declining than the number of stocks which are advancing. So any attempt at recovery is seeing, persistent selling. What does one do from a stock standpoint then? Do you have any on your list right now from the long side and the short side?
Mangalam, it's a very tricky situation because if you look at the way Nifty has been scaling lower, this is the second time wherein on its daily RSI it has hit the oversold zone. Now, just being in the oversold zone doesn't change the outlook, but we need a clear-cut, divergence to set things on a different note. But as of now, it is better to be or keep a long short equation. There are a couple of pockets wherein the rotation has been healthy. We have seen some signs of divergence. The one stock which has hit my radar on the positive side is Tata Consumers. Now, after a decisive drop and a consolidation, what we are seeing here is a healthy positive divergence shaping up near that 1,000 support. The RSI has already started trending higher and the prices were trending lower. So I think sooner or later we may see a very strong change in trend in this particular counter. And that's why we are recommending building long positions here, keeping a stop loss somewhere close to around 978 on a closing basis. On an immediate basis, we may see a swing towards 1,056, but eventually the stock may scale higher towards 1,100. So I think this is one pocket of strength that should be on your radar. And on the short side, real estate stocks have clearly shown, much more weakness. Even on the rollover side, we have seen some major positions rolled on the short side. So here, Godrej Properties has shown a decisive breakdown again. We are expecting that this particular decline may continue towards 2630 on the lower side, and that's why any pullback in this particular counter should be utilized to create short positions. one can keep a stop loss at around 28.10 on a closing basis.
All right, Sacchitanand, thank you so much for joining in, sharing with us your views on the index and specific stocks as well. Take a short break. The management of